Good morning, everyone. It's 10 o'clock. This is Dan Orchard with Fishing Partnership Support Service. Welcome to this week's webinar. We hope your families and friends are healthy and adapting as best you can to the stress that this pandemic has brought to all of us. This is an anxious time, and each week we say we need our community support at a time like this. Fishing Partnership will keep supporting you as best we can and working towards solutions on some of the vexing problems that we're facing. We'll keep getting you as much information as we can and in formats like this webinar. This is our third webinar. It's going to be also about financial assistance and some of the financial programs that are available. We're spending a lot of time on this because it's been complicated and because we're learning new information, it seems like each day, about some of the programs that have been rolled out by the federal government and by the state governments, and then also a lot by the communities trying to help people. So this week's going to be some updates on these programs. We're not going to go into the broad overview of each one as we have before, but I invite you to go to our webpage, and our previous two webinars are there, as well as some additional resources. And Tom will talk about that more in a minute. So in a moment, I'll turn this over to our moderator, Tom Walters, to explain the format and the technical aspects of this webinar. I'm going to introduce our panelists this week. And Fishing Partnership. Most of you know Fishing Partnership Support Services, but I'll just give a reminder. We have navigators in Massachusetts fishing communities, and our navigators are working tirelessly right now to help people with any of these services that we're going to talk about today, as well as healthcare and other needs that you might have, or just to listen, because we know that that's an important part of this right now. Listen to hear what things are affecting you and to try to work towards some solutions or get you the resources that you need. Okay, I'll introduce our panelists. Again, we have Morgan Eldridge. She's our navigator on the Cape and the islands. She's been at the forefront of this pandemic as it's developed, and she's been listening and learning each week and each day to people about what they need. And so she understands, as I've said, the nuances of the fishing industry because she's part of a fishing family and a fishing community. We also have back again this week Steve Barkoff, who runs his own small business where he helps nonprofits create and run personal finance programs. He's worked with us for several years, and he's put on budgeting classes for fishermen for several years. And we have John Hughes back, a CPA and principal with Clifton Larson Allen in New Bedford, and he helps clients in the local fishing community with wealth advisory, accounting, consulting services. So thanks to our panelists for being available. Thank you for those of you who've been listening in. And I'll turn it over to Tom, our moderator, to walk us through this webinar.
Great. Thank you so much, Dan, and thank you all for joining us here today. We have a full agenda, as you can see. We're going to start things off with John and Steve going over the update on federal programs. And if there is anything to be gleaned from an update standpoint for unemployment, Steve and Morgan will be going on to that. After that, they're going to be fielding some questions that they've received throughout the week. And then we're going to open it up to all of you for if you have any questions. Right now, you're all on mute, so we can have a streamlined session. But when the time comes, when we open up Q&As, we're going to have two different options. One is going to be the question and answer button up at the, well, if you scroll your mouse to the top or bottom, you'll see a Q&A button. Just hit that, type in your question. Morgan will be going from there. And depending on the size of our audience, right now we have a smaller group, so we can probably best field those questions from there. This is being recorded, so if you have any questions and you have some concerns about not wanting to be recognized on the webinar, then you can certainly go to our site to submit those questions. And then we're going to finish things off by Dan closing things out. One thing to be aware of is that we have added some new resources in our slide, and I'll go over those when the time is available, as well as the contact information for our navigators. So with all that said, thank you for joining us once again. Let me turn things over to Jonathan.
All right. Good morning, Tom. It's a pleasure to join everyone again here this morning. Had the opportunity now to join you for the past couple of weeks, and certainly there have been some big developments here with the PPP, the Paycheck Protection Program, since we spoke last Wednesday. As Dan had mentioned, we're not going to provide a full overview of the Paycheck Protection Program. Rather, we're going to focus on some of the updates. So, big news last Friday, there was some new legislation signed into law. The Paycheck Protection Program and Healthcare Enhancement Act, also known as the PPP and HCE Act, was signed into law. Now, if you recall, on last week's webcast, the funding for the Paycheck Protection Program had run out. So banks at that time were no longer accepting new applications for the PPP. The good news here with this legislation, there's an additional $310 billion of funding that was appropriated for the Paycheck Protection Program, and also another $60 billion for the E Idl program, which Steve is going to share some information on in a few minutes. So this is certainly great news, but many expect that the PPP funding in this round will run out within a relatively short period of time. There's a lot of speculation on how long the funds will last, and we certainly don't know the answer to that. But the message that we think is important for fishing families who are interested in these loans is that now is the time to apply. We don't know how long the funds will last, so what we can control at the moment is getting our information ready and submitting an application. The PPP loans are processed through your banking relationship, and the important thing is to have your documents ready when you're talking with your bank, and be prepared to provide the information that they need in a timely basis. The PPP provides funds that cover payroll or self-employment income. In essence, this is to cover 8 weeks of those costs and is forgivable if used for those purposes. So certainly it can provide a significant benefit to fishing families. Now, if you do not have an existing SBA or relationship with a lender that is SBA, Small Business Administration qualified, we do have information on our website about a link to SBA qualified lenders. You can also reach out to your navigator for assistance, and we can connect you with an appropriate resource. One thing that I want to note, and we spoke about this last week as well, is that for self-employed individuals, one of the pieces of information that you'll need to submit your application is a draft of your 2019 Schedule C from your personal tax return, or if you've actually filed your 2019 tax return, then having a copy of that return. But at a minimum, you would need a draft of that Schedule C. So the good news here is there's additional funding, and we certainly are here to support you and want to encourage you, if you're interested in this program, to go ahead and have that conversation with your bank and begin the process of submitting an application. Morgan, I believe we have a few questions related to the PPP, and I'm going to turn it over to you, and I'm happy to help answer those.
Okay, thank you, John. We do have a couple of questions. So one of them would be, what factors should people consider if they are trying to decide between the PPP loan and unemployment?
Morgan, that's a great question. And the way I would look at this is that it's not an all or nothing decision. These are both resources that are available to help you. There is some uncertainty as to how these programs would interrelate, but there's nothing that says you can't go ahead and apply for both of these benefits. The PPP would replace 100% of payroll or self-employment earnings up to $100,000 annually. So this certainly is a benefit that makes a lot of sense for many fishing families. Now, if you were to receive the funding through the PPP or even through the E Idl loan, which Steve is going to talk about, we do not believe that you could receive compensation through the PPP during the same period that you were receiving unemployment benefits. However, we would encourage you to apply for these programs, and we believe that the way this would work is that funds that you received through the PPP, you would need to report those as earnings as part of your unemployment filings.
Thank you, Jonathan. And how can someone find a lender for the PPP?
So Morgan, I would encourage folks to reach out to their navigator or to visit our website. We do have a link on there to Small Business Administration approved lenders. Many banks and credit unions are Small Business Administration approved. However, not all are. So that link would provide you a listing of the lenders that are qualified for this program. And if you have questions, your navigators are happy to help you with that.
Great, thank you. I think we are going to move on to the EID loans with Steve. Steve, hi. Is there any new information to share on the EIDL loan?
Yes, Morgan. So just a reminder for everybody, the EID loan, that stands for the Economic Injury Disaster Loan. This is the one you may remember that you have to apply directly to the SBA for, the Small Business Administration. And it's the one that comes with the emergency grant of $1,000 per employee up to $10,000. The main piece of news, Morgan, is just as John said, additional funding was approved by Congress for this loan program. But as of this morning, I do check the Small Business Administration website every day. And as of this morning, they continue to say that they are not accepting any new applications. They're only processing existing applications on a first come, first served basis. So at this point, there's not an opportunity to apply if you haven't already applied.
And if that is made available, what is your suggestion to people who haven't yet decided whether to apply for the EIDL loan?
Yeah, I would just try to stay on top of any communications coming from the Small Business Administration. If they do open up the application again, the application system, you'll want to jump on that right away. The SBA does have a service that you can subscribe to their email communications. So I've done that myself, and it is helpful. You get periodic communications on any updates from the Small Business Administration. So that's one thing that you can do to stay on top of it. But another is just to continue to go back to that website, you know, on a regular basis and see if their messaging has changed at all. Navigators will also know as soon as that window opens up. So you can also try to stay in touch with your local fishing partnership navigator.
Thank you. Do you have any suggestions if someone has already applied but hasn't heard back about the EID loans?
Yeah, a couple of suggestions. First is to respond to any information requests from the Small Business Administration as soon as it comes in. So check your email regularly, including any spam folder that you might have, just in case an email communication came into there. And get back to the SBA with any information requests that they have as soon as it comes in. Another thing you can do if you don't hear anything at all is call the Small Business Administration and ask for an update. The phone number is 800-659-2955. Make sure you have your confirmation number handy when you call because they'll need that.
I just put that number in the chat, so if anybody needs to refer to it, they can. So thank you, Steve, for that update. Would you mind talking a little bit about retirement fund withdrawals? Could you give a brief overview of retirement benefits included in the CARES Act, including retirement fund withdrawals?
Yeah, so, in these webinars so far, we've mainly talked about the programs related to small business loans and also unemployment, but there were other provisions in the CARES Act. And some of them have to do with making withdrawals from your retirement accounts. One of them has to do with a temporary suspension of required minimum distributions that retirees generally have to take every year. A second has to do with some increased limits for 401k or 403b loans. And the third has to do with some special temporary privileges related to withdrawals from a retirement account. I don't think I'll talk in too much detail about the first two, the required minimum distributions or the 401k loans, but if anybody has questions about them, feel free to chime in during the open Q&A session. But let me describe the withdrawals a little bit more detail. Typically, if you're still working and you want to withdraw money from a retirement account, two things are going to happen. First, you're going to have to pay income taxes on any of the pre-tax money that you withdraw. And then second, you're going to have to pay a 10% penalty on that same amount. So it gets to be very expensive to withdraw any money from a retirement account during your working years. What the CARES Act allows is for people to make a withdrawal of up to $100,000 and there's no 10% penalty. There is still income tax due, however, but if you pay the money back within 3 years into your account, then you won't have to pay that income tax liability. And if you choose not to pay the money back, you can at least spread the income tax liability out over 3 years. So it makes the cost of that withdrawal a little bit easier to handle than typically according to the rules.
And what are some of the issues to consider before someone decides whether to take a withdrawal?
Yeah, I think a lot of thought needs to go into this decision before you move ahead. For example, if your intention is to pay that money back into your account over the 3-year period, you're really going to have to do some cash flow planning and think about how you're going to be raising that cash in addition to covering all of your other household expenses over that 3-year period. And if your intention is to not put the money back in, but rather pay the income tax that's due over 3 years, you're going to have to do quite a bit of planning around your tax withholding and make sure that extra money is set aside to cover that tax liability. And beyond that, Morgan, if you don't put the money back, then your whole retirement plan is going to have to be adjusted because that money is no longer in your account compounding interest over time and growing for your retirement nest egg. So you're going to have to recalculate and reconsider your retirement plan. So there's very kind of significant and serious planning questions associated with this decision.
Yeah, it's a lot to consider for sure. Who should people speak with next if they are interested?
Yeah, as I mentioned, there's significant questions around taxes and around financial planning, retirement and investment planning. So my suggestion for anyone considering this would be to assemble a team of experts and have a financial expert and a tax expert guide you on this decision. And if you do make the decision to do it, then help you with the planning to actually get the money back into the account or account for the additional tax withholding that you're going to have to make, and also revisit your retirement plan.
Steve, thank you. That's all such helpful information and an update. I think we're going to go back to Jonathan so he can talk a little bit about the SBA Express Bridge loans. Jonathan, could you give us a brief overview of the Express Bridge loans?
Yeah, absolutely, Morgan. So this program could be a great option for folks that have applied for the EIDL. As Steve mentioned, the SBA is currently not accepting new applications for the EIDL. And for many who have applied for this program, initially the expectation was that you would be eligible for an emergency grant that would be received within a matter of a few business days. Now, that certainly hasn't been the case for most folks. The SBA, or Small Business Administration, was overwhelmed with new applications that were coming in for the EIDL, and that 3-day turnaround has turned into more like a 30-day turnaround, is some of the information that we've been hearing. Now, that emergency grant program is still available, and that's the up to $10,000 in funds through the EIDL that would not be, that you would not have to repay. That's a grant. So that's separate from the loan piece. So there's many out there who are in the situation where you've applied for the EIDL and you haven't received any of those funds yet. So there is another program that's available. It's called the SBA Express Bridge Loan Program. This is a little bit different than the EIDL. As Steve mentioned, applications for the EIDL are taken directly by the Small Business Administration. Now, the Express Bridge Loan Program, you would apply for that directly through your lender, your banking relationship. Now, this needs to be, the applications need to be processed by an SBA approved lender. So again, that's something where you can visit the Fishing Partnership website or talk with your navigator to be connected with an SBA approved lender. This bridge loan program provides up to $25,000 in a loan. It's an express loan, and I'm going to point out a few of the conditions and highlights of this program. So one of the major criteria for this is that you need to certify that you do not have the ability to obtain loans or to obtain these funds from another source. So this is intended to be a bridge loan for folks that absolutely need to get this funding. You cannot wait to the 30 days or so, whatever that time frame is going to be for the SBA to process your EIDL or your PPP loans. You have an immediate need for funding, and you don't have an option to receive this elsewhere, outside of a federally funded program. So that's the major criteria for this program. Some of the other highlights, you need to, have been in business when the president declared a disaster due to the COVID-19, which was back on March 13th. So I think, most folks would certainly qualify for that. You also need to have an existing business relationship with an SBA lender. Now, that's a little bit contradictory to what I just said as far as us connecting you with an SBA lender. However, this does not need to be a loan relationship. This could be a bank account. So it very well may be that you have a banking relationship with a bank or credit union that is an SBA approved lender. The reason that they have this requirement is this is intended to be an express loan, and it's a streamlined process. So this is going to be, the application is going to go through a bank or a credit union that is, familiar with you. You've got an account there, and because of that, they're able to streamline the process. Now, this is up to $25,000. And the way this would work is if you are approved for the EIDL, this $25,000 would then be refinanced as part of that EIDL. If you're not approved for the EIDL, this would become a loan with a 7-year term. Again, I just want to emphasize that the major kind of criteria for this is that you need these funds to continue the business, and you're not able to obtain them elsewhere. So, if you think this is something that may be helpful to you, certainly would encourage you to explore this, talk to your lender, and also, reach out to your navigator for assistance.
Thank you, Jonathan. I think we're gonna go back to Steve now. And Steve, would you please talk about a little bit any of the new information on the pandemic unemployment assistance or the PUA program?
Yeah, Morgan, not a lot of new news. We covered this in a lot of detail in last week's webinar, which provided a lot of useful information about the PUA program and how to apply through the state of Massachusetts. I don't have a lot of new information on that, other than to say that if you believe that you might be eligible and you haven't yet applied, the application system is up and running, and you should definitely take advantage of it. The PUA program essentially allows people who normally would not be eligible for unemployment to get unemployment benefits. So that includes small businesses and independent contractors. And it also provides an additional weekly benefit of $600 on top of the normal unemployment benefit. So it's a significant program, and it provides a significant amount of relief for families at this time.
Yeah, we've definitely been seeing a lot of people applying for it, and there's a lot of questions that have come in, and I'm going to highlight a couple of those to see if we can get some answers on that. Is the unemployment taxable?
Yes, so the state of Massachusetts has been clear that this is taxable income, both at the federal level and at the state level. The application system will allow you to elect to have taxes withheld, and I would encourage everybody to select that option so that some money is set aside for the tax liability. By the way, Morgan, the state of Massachusetts has really useful information on their website. They have a PUA webpage with frequently asked questions. It includes a guidebook with additional questions and answers. So a lot of information there. I would encourage everybody to take a few minutes and read the information that's available. And I believe that the Fishing Partnership website also has links to that information, so you can access it directly through there.
Yes, and at the end of this webinar, we'll have some links to those websites. I also just put the link in the chat if anybody wants to check it out.
Nice, because it is very useful information.
Can you explain how a small business owner should report income for certification each week when they go to claim their benefits?
Yeah, so this is a tough question. I have not seen any written guidance from the state of Massachusetts on how to do this. The one thing that we did learn a couple of weeks ago, and this was related to verifying your 2019 income, is that a small business can report its net income from Schedule C. So this is down towards the bottom of Schedule C. I think it's line 31. So it would be your net income. It would be your gross income, less cost of goods sold, less other business expenses. And if your if your pay from a small business is essentially the residual amount of net income from your business, then that would be kind of very similar to that figure. It's what's left over after you cover all of your expenses. So they didn't provide that guidance related to your past income. And the one thing I would say is that it probably makes sense to be consistent with that in reporting your current income for certification. So to base it the best you can on what your net income from your business was for the week. So if you are doing cash accounting for taxes, it would be the cash you brought in less the cash you spent on expenses. Now I know, Morgan, you had mentioned earlier that some people were concerned that that might be overstating their income because they have some upcoming expenses that aren't reflected in that.
Mm-hmm.
My suggestion there would be to explore if you could make regular payments on those upcoming expenses, basically spreading it out per week, so that it would be a more level level of expenses for your business rather than a lumpy type of expense that you have nothing in some weeks and a lot in another week. Obviously, that is only going to relate to fixed incomes that, fixed expenses that show up periodically. It's not a variable expense related to fishing. But if you have some lumpy fixed expenses, I would at least explore if you can spread that out in a more even pattern by week, and so that your net income that you need to certify is more representative of what you're actually earning in the business. The last thing I would say, Morgan, it's important to be truthful in your certification. There's penalties associated with knowingly providing incorrect information. So that's the last thing you want to do. We don't have a lot of guidance on exactly the procedure to follow. So I would just use the best judgment that you can and use the best figures that you can in an honest manner. And that way, if they come back and ask questions, you can answer it with a clear conscience, and you can also provide any documentation you have.
Yes, definitely good advice. If someone received traditional unemployment through the regular route, through the DUA, and it ran out, can he or she reapply?
Yeah, it appears that the answer to that is yes, Morgan. Again, that was one of the FAQs that's right on the Small Business Administration's website, that it does say if benefits had run out, you can reapply because there's potentially some new additional benefits that are available to you. And the suggestion in the FAQ is to apply for the PUA. And once you apply, you will receive additional instructions from the state on how to access this additional funding for people whose prior benefits had already been exhausted. So take a look at that website for more details.
Okay, thank you, Steve. I think right now we're going to go to our open Q&A session. So I'm going to turn it back to Tom.
Fantastic. Thank you, Morgan. As I mentioned earlier, we have the Q&A button that will allow you to ask questions. I see we have about 7 already in queue. So why don't I turn things back over to Morgan. If anybody has any questions, like I said, just simply click that Q&A button. Morgan will be fielding those right from there. Take it away, Morgan.
Thank you, Tom. I can see on here we have a lot of unemployment questions. I'm just going to preface this with we may not be able to answer all of them since we don't have a lot of guidance on this. So we will do our best and we can take back the questions and hopefully follow up with you with an answer. So for the first question, Jonathan, Jay asks, I made an application for a E Idl grant a while ago. Haven't received any confirmation. Should I reapply?
So that's a good question. And so Steve, this may be a question you could shed some light on as well. I know the advice that we have been giving folks is to call the Small Business Administration if you have a question on the status of your application and ask about it. You should have received a confirmation number when you submitted the initial application. If you haven't, then in that case, it may make sense for you to give them a call and find out what's going on. Unfortunately, the SBA website is not accepting new applications at this time. So the hope here that would be that you'd be able to clarify that your application is in process. Steve, I don't know if you have anything to add to that.
Not really, John. I just agree with you that the best option right now is to call and ask for an update since it's not even possible to reapply.
Okay. The next question is from an anonymous attendee. Can you get an E Idl grant without taking a loan from the SBA? Steve?
Yeah, I believe that that's possible in one of two ways. One is that it's possible that if the loan is approved, you can turn down the loan and still keep the grant. That's something that I would ask the Small Business Administration just for clarification before you do it, but I think that that might be possible. Even if they say no to that, there's no prepayment penalty for the EID loan. So you could accept the proceeds of the loan and then just make a lump sum prepayment after you receive it if you don't need the money. So either way, it seems like you're going to be able to keep the grant even if you don't use the loan proceeds. The benefit of continuing along with the process and considering the loan is that maybe your business does have working capital cash needs that could be funded through that loan, and it's a fairly low interest loan at 3.75%. It can be spread out over 30 years, and it can be deferred for 12 months. The loan payments can be deferred even though interest will accrue during that time. So there's quite a bit of flexibility built into it. So it's worth considering before you decide to turn it down.
Jonathan, this is from Kate. If money from the PPP is used toward work-related costs, then is it forgivable? And do we take the gamble to use the money that may not be forgivable and then have to pay it back?
All right, Kate, that's a great question. So the proceeds from the PPP, if they're not spent on forgivable costs, it would convert into a loan that would be due on a 2-year term at 1% interest. So worst case, if you have a portion of the loan that isn't spent on eligible costs, is that you'd have a very attractive loan at 1% interest, which really, we all know there's no way we'd be able to go out to a bank and get a loan on those terms. So as far as what would be an eligible cost for the loan forgiveness, well, payroll costs would be eligible. And in order to get the full forgiveness, you would need to spend 75% or at least 75% of the loan proceeds on payroll or self-employment income. So that's something important to consider. Now, the remaining 25%, you may ask, what can I spend those on and have those proceeds forgiven? Those can be spent on utilities, rent, and interest on fixed debt. The caveat on the interest is that those loans needed to be in place prior to the COVID-19. So there's some considerations here as far as how the banks will determine what portion of the loan is forgivable. The primary piece there is that you're spending the money on payroll. At least 75% is spent on payroll. And the other consideration that goes along with that is that if you have employees, you're maintaining a similar headcount. So if you look at the number of employees that you had prior to COVID-19, and then the employees that you have during the period where you receive the loan proceeds, to the extent that you were to reduce your number of employees, that would affect how much of the loan is forgivable. There's certainly some nuance to how that's determined. But again, I would say, Kate, worst case scenario would be that you use these proceeds on some other funds that aren't eligible, and you're just going to need to repay those over the 2 years at the 1% interest. So I hope that's helpful.
Yes, thank you. And so here's an unemployment question from Kate. Can you apply for unemployment if it is uncertain that certain species may be at such a low price, even if you are fishing? Steve?
Yeah, I think that the answer to that is probably yes. I mean, it's more based on what your income was last year compared to what it is right now. So there's not a lot of forward-looking information in the determination. But if you're seeing that kind of impact right now in your business, then yes, it should be reflected in the unemployment benefit, and it's worth applying.
Yeah.
And by the way, if your business conditions deteriorate even further, then you can certify over time that your income is declining, and just continue to provide updates on that to the Department of Unemployment Assistance.
And here's another question about unemployment, Steve. Can a self-employed fisherman that also has a small part-time job that gets a W-2 apply for PUA? It is more than $5,100 a year, which is the question on the application. So the portal is saying I'm not eligible for PUA. If I apply for regular unemployment, will I also get PUA for the bulk of the income I'm losing?
I think the answer to that is no, that it's one or the other, and they do have this strict rule around how much income from W-2 they have that $5,100 threshold to determine whether you should get regular unemployment or the PUA. At the end of the day, both of those programs do get this extra $600 benefit, so you're not really losing that by going one way or the other. But you're going to have to comply with the rules that they have in place for that. So if it was above the 5,100, you're going to be forced into the regular unemployment program. That's my understanding.
And this is about the PPP. Have you heard if the PPP application portal is working again, or are the banks still having issues submitting to SBA? That would be for you, Jonathan.
Sure. Yeah, Morgan, that's a great question. So the SBA has come out and put some restrictions on the banks as far as using automated systems to upload applications. I believe the banks are limited to a certain number of applications that they can submit per hour. So the system is up and running with some of those restrictions. So your bank should have the ability at this point to go ahead and get your application submitted to the Small Business Administration. And related to that, one thing that may be helpful to clarify. So when you apply for a PPP loan, you do that through your bank. So your bank is going to receive your application. It's going to review the supporting documentation. Basically, your bank is going to approve the application, that you've met the qualifications, all of the support is there. At that point, the application would then be submitted by the bank to the Small Business Administration for approval. And once the Small Business Administration approves it, you're in what they call the pipeline for funding. So when the last round of funding ran out, there were a lot of self-employed individuals and businesses that had applications that were approved by the bank, but not yet the Small Business Administration. And I think that's important to understand because you want to make sure that one, your bank approves your application, and then I'd encourage you to check in with your with your lender, with your banking relationship once they've approved it, just to make sure that they've gone ahead and submitted that to the Small Business Administration. So I hope that information is helpful.
Thank you. And I believe this is a question for on PPP as well. What are considered eligible costs?
That's a great question. So the eligible costs would be your payroll costs. If you have employees, that would also include the any health insurance premiums that you pay on their behalf, and any retirement plan contribution. So those are your eligible payroll costs. 75% of the loan proceeds need to be spent on those payroll costs to get the full forgiveness. Again, there's some other conditions with that. So beyond payroll costs, eligible costs would be utilities, which are any of gas, electricity, water, things like that we would typically include consider utilities. It also would include telephone and internet. It excludes cell phones and cable TV. And then you'd also, as an eligible cost, you would have interest on debt that you had in place prior to the COVID-19. I believe the date on that was mid-February. Is what they put in place. So if you had, a loan on a boat, that interest on the loan, assuming it was in place prior to, February, would be an eligible expense.
And what if, so I think this kind of continues, what if my employees are considered self-employed?
So this is something where initially there was uncertainty around this, and it created some confusion. But since then, the Small Business Administration and the Treasury have come out and clarified that employees would be someone that you're paying through payroll, that would be reported, on your quarterly and annual payroll tax filings. Independent contractor, somebody that you'd pay on a 1099, would not be considered an employee for purposes of the PPP. However, they, as an independent contractor, self-employed individual, would have the ability to apply on their own for a PPP loan.
I also have a question that came in earlier about employees that were, an application for a PPP was approved. the employees that he had were have been collecting unemployment, and now they would prefer to stay on unemployment rather than coming back. What should someone do about that if they've already gotten or are approved for the PPP?
Well, yeah, that's a really good question, and it's a tough situation. I think,
Yeah.
fortunately, it's really an unintended consequence of these programs and the way they relate. Yeah, I mean, there's a lot of folks out there that they're doing better with the unemployment compensation. So now, the employer is thinking they're doing something to help them by offering to bring them back on payroll, and they're saying, wait, hold on a second, I'd prefer to take the unemployment. So as an employer, and I think this goes back to kind of what Steve said, is that we want to try to do the right thing here. We want to answer honestly. There's kind of rules in these laws, but then there's also the spirit of what's intended. And I think as an employer, I'd say your responsibility here is to offer your employees the option to come back to work. If they're not willing to come back to work, if they want to stay on that unemployment, it certainly puts you in a difficult situation. And what would happen is that when you get to the end of the 8-week period and you determine how much of your PPP loan is forgivable, well, you're going to have a portion there that you didn't pay out because those employees stayed on unemployment. And in that case, you'd have the option of repaying those funds immediately at the end of the 8 weeks, or you could term this out into that 2-year loan at the 1% interest. So certainly a difficult situation. I don't think there's, a clear answer on this. My advice would be to, offer your employees the ability to come back to work. And, I guess, it's tough because you want to be sensitive to their situation. So I think it's a delicate balance, but I would say from a perspective of the PPP, your responsibility here would be to, offer them the opportunity to come back on payroll.
Thank
John,
you.
I have a kind of a follow-up question for you related to that. My understanding was that you did not necessarily have to rehire the exact same employees, but you just have to maintain your headcount and payroll. So my question that I would like you to clarify is another option to hire other people who could do the work and count them in your headcount and your payroll during the 8-week control period?
Yes, Steve, that's a great follow-up question. So, two of the criteria that you would look at for the PPP loan forgiveness would be your overall payroll. Did you spend the money that you were eligible for to cover your 8 weeks of payroll? So what were your payroll costs? What were your full-time equivalents? So based on what's available in the current guidance, Steve, I do think that would be an option. There may be some, opportunity to hire some other folks that, are willing to take those positions.
Okay, we have a couple more minutes and a couple more questions. So Steve, these are, they all seem to be unemployment questions we may or may not be able to answer, but we'll give it a shot. This is from John. I got 5 weeks of unemployment from the state, but only 3 from the federal. Will those 3 weeks come later? My crew has seen the same.
Yeah, John, I think what you're saying is when you mention the state, it's kind of the typical unemployment benefit, and then when you say federal, it's that extra $600 per week. My guess is what's happening here is that the extra $600 has a shorter look back period or retroactive period than regular unemployment benefits. I think it only goes back to early April. So that would tie to the 3 weeks that you've observed. Those dates are all in the FAQs that the state of Massachusetts has put up on their website. So you might want to read what they have there, but I think that might be the answer, that the retroactive period for the extra $600 only goes back a few weeks. And I believe it extends through late July of this year.
Thank you. And the next one is from Robin. My husband applied for PUA and was approved. And when he went in on Sunday, it had put him under regular unemployment and he should not be in it.
Well, Robin, I can't explain that circumstance. I'll let John comment as well. Maybe he has some insight into it. I would suggest there is a phone number you can call for the Department of Unemployment Assistance. My understanding is that the wait times can be long, but it might be worthwhile to call and ask what happened if you were approved for one and then now seem to be in another one.
Yeah, Steve, I would agree with that. I mean, I'm not sure why that would have happened. So I think that, that's the best thing you can do here would be to call and talk about the specifics of the situation.
The last question is coming from an anonymous attendee. I think we kind of may have answered this a little bit, but we'll just kind of review it again because it's a common question. If I fish a little while on unemployment, making way less than same time last year, will my unemployment benefits change from week to week based on what I made the previous week?
Yeah, my understanding is that it could change. People who are receiving these benefits need to certify what their current income is. And the principle behind that is that if people's incomes have recovered, then they should no longer be eligible for benefits. So my suggestion there is just to report your current earnings honestly each week. And if it requires an adjustment to your unemployment benefits, then that's the appropriate consequence to it.
Well, I think that's all the questions we have right now. Tom?
Great. Thank you, Morgan, Steve, Jonathan, and thank you all for submitting your questions. If you have any other questions, obviously we have a variety of resources available. First and foremost, the resources that are best used are our navigators. And as you can see, we've got all their contact information up there. Obviously, Morgan is one of them, and she has many other peers. So reach out to her or any of her peers, the one that corresponds to your area. And as I mentioned before, we also have a variety of resources. Here we have many of them. For those of you that joined us last week, this may look familiar, but it's not, because we have two additional links that we have here. One is the how to apply for the pandemic unemployment assistance. Actually, no, the one that was added recently is the Department of Unemployment Assistance virtual town meetings. That was added. So certainly that's something you want to avail yourself to. And many of the questions that we didn't get to last week, or some of the questions that come in, we've covered on other webinars. So you definitely want to avail yourself to our YouTube channel, where the other two webinars have been recorded. So definitely avail yourself to those. I'm going to keep this up for a little bit longer so people can avail themselves to that. But with that said, thank you all. I'm going to turn things over to Dan, who will lead us out.
Thanks, Tom. And thanks to the fishing community for listening and providing us with the feedback for this. Thanks again to our panelists and staff for putting this together. As everyone said, these are brand new programs. The unemployment for self-employed is only about 9 days old now. And as fishermen know, in any government program, the questions don't always line up with the way a fishing business works. So we'll keep working on trying to get the answers to some of the nuanced questions that you've been asking. Next week, we're going to shift topics. We're going to be here again Wednesday at 10 o'clock. We're going to shift from financial assistance and the loans that we've been talking about, and we're going to focus on some of the ways fishermen and dealers have been adapting to the loss of markets by trying to create new ones through direct customer sales and new partnerships with restaurants and other groups. So we'll talk about the regulations that are involved in that and some of the lessons that people have learned so far about how to move their product and really to feed people because there has been a demand for seafood, and how do we bridge that gap? So with that, we hope you can join us next week. Thank you for joining us again today, and have a great day.